Hello, good day, and welcome to the third day of our training. Today is day 3 of our training titled The Profit Factor Formula. I'm so happy that you're able to make it to the last class, and I'm so happy you're able to access this, because if you are accessing this class, it means you are a paid member and you have made a financial commitment to the program. That's why you are having access to this tutorial. So I really appreciate that. Now, in the past 2 classes, we've covered a lot. We've talked about perceived profit and the true profit. We talked about a comparison between the intraday traders and the swing traders. We talked about having a 10% ROI mindset versus having a 50% ROI mindset. These are things that we've already talked about. So in today's class, we want to dive deeper. How do we identify the beginning of a trend? How do we identify the end of a trend? How do we know the trending pairs and the pairs that are not trending? What do we look at before determining a currency pair to trade and the one not to trade? In fact, how do we determine when to trade and when to stay away from the market? So all these things, we want to cover them, and other things that I've not even mentioned here. So let's get straight to work. And if you have questions, remember, you can always reach me by sending me a WhatsApp message on 0818 599 0414. Now, let's start with identifying the beginning of a trend and the end of a trend. Now, if we say you want to identify the beginning of a trend and the end of a trend, it means you are handling trending pairs. There are pairs that they don't have trends. They are very erratic in nature. The best thing is to keep away from such. There's a different way of trading some of them. Some of them, there's no way of trading them. It's just like gambling. So it's just best to stay away from them. Let me give you an example of pairs that have trends. Look at Euro USD. It has a trend. You can see it has a bullish trend here. Then it went bearish. It created the support here. There's a key support here. You can see it's bouncing on this line, bouncing on this same line, and this region, there's a kind of price reaction to a support line, price reaction to a resistance. You see what happened here? When it touched this line, there was a form of reaction. So if a currency pair that reacts to support and resistance line is a trending pair. This is a daily chart. Let's go look at 4 hours chart. So this is a 4 hours chart on the Euro USD. Let's look at it critically. I'm going to snap this back. Good. So you see that there's a triple top that wanted to form, but instead of forming a triple top, it was broken here. So it reacts to support and resistance. Let me also draw a line here to show you what I'm talking about. You see, it reacted to this line at this region. It also reacted to this line at this region. These things are in shades of gray. It cannot be accurately touching the line always, but there must be a kind of reaction to support and resistance. Those are trending pairs. Now, let me give you an example of non-trending pairs. These pairs doesn't have any trend. They just behave the way they like. Let me give you an example at this exotic pair called the USD NOK. This is, in fact, as the name depicts, this pair is built to give traders a knock in the head. So you see, this is USD NOK. It doesn't have any reaction, any kind of concrete reaction to support and resistance. You can see the erratic nature of this pair. Let me even try and draw a support line to see whether there's something really tradable going on here. Well, actually, you can see that this line, because that's the only thing I'm seeing here. Look at this line. You see, it reacted to support, resistance here, reacted to resistance here, reacted here, reacted here, reacted here. But there's no trend. Is it going bullish or bearish? If you look at this chart, can you say this is a bullish chart or a bearish chart? This is a weekly chart, a bigger time frame to be able to even see a good trend. That's weekly chart. Now let's go and have a look at daily chart. You see, daily chart is not a trending market. But one thing about this currency pair is that it is highly volatile. Let's look at the distance between, let's just call this our support to the resistance. That is 38,259 pips. Well, let's remove the last decimal. So that will be 3,825 pips. And this is something that happens within few days. Let's go and check the 4 hours chart. The 4-hour chart is showing as if it has a trend, but actually this is not something that you should be putting your money on. See so many spikes, see all these needles. These are the needles that takes away your stop loss. After finishing your account, you start going as you predicted. So this is not a trending pair. Now let's look at another trending pair. This is GBP USD. This is a trending pair. Now I'm going to the daily chart to show you how trending this is. So I'm going to draw, let me draw a support line here. Good. And I'm going to draw another line at the top here. Good. You see there's a price reaction. See price reaction to this line here, here, and here. See price reaction to this, to this. So this GBP USD is reacting to price, to support and resistance. There's a trend in this space, and you can use this as a basis for your trading, because I'm looking at 4 hours chart now. See the lines I drew. Look at the distance between the support and resistance here. It's about 223 pips. So I can wait for the price to touch this line. If I see opportunities such as railway track, that is bearish candle followed by bullish candle, I just enter my buy position. So it's a trending pair. Now the question is, how do you know the beginning of a trend and the end of a trend? The first thing I said you should do is find out the trending pairs. Now, when you find out the trending pairs, that's when you now determine, okay, now let's go further to know the beginning of the trend and the end of the trend. A pair that is not trending, there's nothing you want to see as the beginning of any trend and the end of any trend. So it's only trending pairs that this works with. Now, you too, you have work to do. I want you to search the market to find out the trending pairs. These are pairs you should trade. Trade that doesn't have trend, please don't go into it. So find out the trending pairs, and you can send me some samples of trending pairs that you have found out. Even if you found non-trending pairs, you too, go ahead, show me, coach, I found this pair. This pair is not a trending pair. Let me know. So that's it. So let's go further. How do you find out the beginning of a trend and the end of a trend? Let me look at the daily chart here. Now, see, from this level here up to this level is a trend. This is the beginning of the trend. This is the end of the trend, right? Good. Now, let's look at another one. From here down here, this is the beginning of a trend. This is the end of a trend. That's another one. Good. Now, this is another one, the beginning of a trend, the end of a trend. So we have medium-term trends, we have short-term trends, and we have long-term trends. We have trends that can span for years. If I look at monthly chart now, these are trends between 2019 to 2021. This is a trend between August 2016 to December 2017. Look at this one. This is a trend between 2014 to 2016. These are huge trends. These are long-term trends. Now, we also have medium-term trends. Let's look at weekly chart for the medium-term trends. That's weekly chart. So, this is a trend between September 2020 to February 2021. It's a trend, you see. Now, let's look at another one, which I will also call medium-term trends on daily chart. These are the trend I showed you earlier. 4th of February 2021 to 26th of February 2021. That's a medium-term trend. Now, for the 4 hours chart, that's a short-term trend. I'm not even talking about 1 hour 30. Those are scalpers time frames. So we are not scalpers here. We are swing traders. So this is 4 hours chart. This is a short-term trend. See, this is a trend here between 16th of April to, let's look at it again, to around 19th of April, 19th, 20th of April. So this is it. So now, how do you know the beginning of the trend and the end of the trend? You use the support and resistance lines to do what? To identify the beginning and the end of the trend. So let's look at the daily chart. Now, we have identified this place to be a key resistance. I believe if you're in month 1, you know what I mean by that. See price correcting here, see price correcting here, see price correcting here as well. So this is a resistance. We have established that point. Now, look at this place. This is a support line. It was previously a resistance. It was converted to support at 1.37558. Now, this is 1.37558 I'm referring to. So which means it's also a significant line. What I'll be waiting for now is for another trend to start, and that's when I enter the market. So what am I waiting for? I'm waiting for price to touch the region of 1.37558 and form a railway track. I will know another trend has begun. That is the beginning of the trend. So the line you are looking at the bottom marks the beginning of our medium-term trend, and the line you are looking at the top marks the end of our medium-term trend, because that's what we are able to identify here. Now let's go to another currency pair. This one you are looking at is GBP USD. Let's go to another currency pair. Let's look at NZD USD. This is NZD USD right now, weekly chart. Now this another one. This is medium-term trend, a weekly chart. You see that price reacted here, here, and here, meaning making this line significant. Now, what I'm seeing here is that the price didn't even touch this line and went up. When you see things like this, there's a possibility that price will still snap backwards to go and reach this line before resuming the upward, because this is actually a bullish trend. It's going to be bullish, but I'm expecting price to actually touch this orange line before forming a railway track. But price did not touch this orange line before forming a railway track, making this trade risky. Let me look at the distance between the railway track and the support. 176 pips, which is a long way. So entering this trade, you are exposing yourself to a big risk, because if it goes back, that would be a very bad scenario. So I will not trade based on this weekly chart. Let's look at daily chart, whether there's something significant we can pick out of this. So this is the daily chart. Daily chart is so choppy. Look at the way the candles are forming. You see? So this is not a good trade. I will stay away from it. If it goes eventually and I stayed away from it, I don't feel bad, because in trading you have to have self-discipline. Without self-discipline, you will just end up wasting your money. Now that's for the NZD USD. Let me look whether Euro GBP has something to offer. Euro GBP. Now, one thing about Euro GBP, you know, we have Euro USD and we have GBP USD. Let me show you something. I have not shown this to anyone before. I'm doing this for the first time. See, Euro USD has a powerful tendency to be bullish. Euro USD is a strong currency pair, very big and powerful tendency to be bullish. Whereas GBP USD, it has a lot of tendency to be bearish. So if Euro GBP USD is falling, Euro USD can be going up, because Euro USD is stronger than the GBP USD. You understand that? Now, there's a positive correlation between Euro USD and GBP USD. When you see GBP USD, see GBP USD right now. That was this candle formed on Friday. That's 23rd of April. This bullish candle. But you see that it's kind of going down. But look at Euro USD. See, Euro USD is going up. Let me look at the daily charts too, so that we can be on the same page. See, Euro USD is actually going up. So which means Euro USD has a bigger strength than GBP USD. So if you now trade Euro GBP, that is Euro and GBP. So you buy Euro and sell GBP. You see, Euro GBP is also going up. So you can use these two currency pairs to analyze Euro GBP. You can use Euro USD and GBP USD to analyze Euro GBP. What I'm saying here, I don't think I've shared it with somebody else before. This is the first time I'm sharing this with my students. So I want you to consider this and go and examine those pairs. Monitor these three pairs: Euro USD, GBP USD, and Euro GBP. Monitor those pairs. Now, you know how to identify the beginning of a trend and the end of a trend now. The first thing is to find out the support and resistance levels. Then you know that when price touches those levels, that marks either the beginning of it or an end of a trend. I hope you understand that. Now, the next thing I want to explain here is how do you determine your lot size. I've already explained that in your training in your month one. That's what I did in month one, but I want to recalculate. I want to show you again so that I'll be reiterating the same point so you won't get it wrong at all. Now, I said that the formula is, if you are trading in Naira, is 0.00000001. multiplied by your capital. That is how you calculate your lot size. Now, if you are trading with dollars, the calculation, the formula says you use 0.0001. That is 4 digits after the decimal point. Let me do that. 0.0001. Good. Yes, that is the formula. You now multiply it by 1,000. 1, 2, 3. 1,000. What's that? 0.1. Yes, this is the correct. Yes, this is the correct thing. This is the correct lot size you should use for a $1,000 account. 0.1. Now, if you are trading with Naira, don't use this same formula. So if you are trading, for instance, how much is $1,000 now? $1,000 is going out to about $500,000. So let's say, let's do it 500, 1, 2, 3. Yes, 500,000. I said something in last year, which is 2020. I said the way this country is going is getting to a level that the dollar exchange rate will be 1,000 naira to $1. And you have to be prepared for it. We are Forex traders. We use historical price patterns to determine what will happen in the future. So if we are Forex trader, why can't we apply the same concept to other things, such as the way the economy is going, the way the inflation is rising? We should use that to predict the trend of Naira. Maybe there's nothing like NGN USD on the CFD market, but you should be able to use that to know what's going to happen next. So, well, that's just by the way. So this is 500,000, which is equivalent to $1,000. So multiply it by the formula, which is multiplied by 0.0000001. That's a lot of zeros. So 6 zeros before 1. What is the answer? 0.05. The way you calculate it for Naira is different from the way you calculate it for dollars. So you use 6 zeros after the decimal point and a 1. I hope you understand. That's how to calculate it. Now, for instance, you want to enter a trade and you still have tendency of entering more trades that day. You want to enter like 3 trades for that day. Now, you have the capacity of saying you want to use 0.05. You can split your position into 2 or into 3. You can decide to use 0.02 on GBP USD, 0.02 on Euro USD, 0.01 on AUD USD. You can split that lot size, but you entering 0.05 several times, meaning that you are entering 0. If you use 0.05 twice, you have already entered 0.1, because 0.05 plus 0.05 is 0.1. So you have to be careful about using multiple trades on this lot size. Now, why did I make the lot size so small when it comes to Naira and big when it comes to dollar? Is perception. The way you perceive profit when you are trading in Naira is completely different from the way you perceive profits when you are trading in dollars. So just use the formula like that and I think you'll be safe. Now, for somebody who is using 0.1, now you can split this 0.1 into 5 by using 0.02 5 times. So you can enter 5 different trades using 0.02. So if 0.1 is your entire power, that is your stamina on an account, don't use 0.1 if you know you want to enter multiple trades. If you use 0.1, you don't enter any other trade until you have closed that trade that you entered with 0.1. For instance, you see a good opportunity in NZD USD, you use 0.1 and you have a $1,000 account, and you see another opportunity in gold and you still want to use 0.1, you want to crash your account. That's what it means. So once you see that you want to enter multiple trades, you split the strength of your account. If it is 0.1 that you can enter, then you use 0.02 so that other trade opportunities that come and you want to enter, you can use the remaining buying power that you have to enter the multiple trades. So in summary, if you are trading with $1,000, your lot size is 0.1. You are trading with $500, your lot size is 0.05. You are trading with $200, your lot size is 0.02. You are trading with $100, your lot size is 0.01. I hope you understand this concept. Please don't forget, and also you can refer to your month 1 class. I've said it already. So that's how it goes. I must make mention of this. There's a strategy I created in year 2009. It's called the 40 pips daily strategy. That strategy is out there on the public domain, is out there on YouTube. Please, I'm using that for an experiment. It's a free strategy. You are a paid member. You are not to be using that strategy. That strategy is for those who are still scouting around and they are just experimenting. So you are a paid member. You have access to the Forex treasure map. Use the strategy I'm showing you in this program. 40 pips daily is a lazy man's approach to this business. Don't use that. Use the Forex treasure map trading system. I hope you understand that. And the message to those who are in the VIP class: if you are in the VIP class, you are expected to be trading with something more substantial by now, because as a VIP student, you renew your membership monthly. If you're a VIP student and you are trying to access the site and it's blocked out, it means your membership has expired and you have to renew. And if you be renewing monthly, it means you should be trading with something. You must have capital to be trading with, so that anytime we call this trade, you too can be a part of it and you can be building up your account. Because that's what makes it sensible for you to be paying monthly for the VIP, because you are trading and you are making returns on your trading. So that is the idea behind it. Please, if you are not trading, you are still using learning account and you are in VIP, please let me know. Call me so that we can discuss it and know what to do next. Okay, we have said a lot of things in today's presentation. I think that will be marking the end of our 3-day class on the profit factor formula. There are still many things I still want to show you, but I can't compress everything into a single video. I'll still be giving you more tutorials in the future. I just want you to go through this over and over again to make sure that you get the idea. So that's all for this class. Have a wonderful trading experience and bye.